It's been a bit of a hot topic over the last few weeks, but the Chinese housing market is probably far larger than you realize, and that's one of the reasons it's garnered so much attention. We've all heard about Evergrande defaulting on its bond payments last month, and I know a lot of people were expecting an instant collapse, and they're now skeptical that the supposed collapse hasn't materialized. The truth is, though, that the collapse has started. It's just going to take months or even years to fully develop. People like to point to the Great Recession of 2008, how quickly the banks fell in unison, and how quickly the economy took a turn for the worse as a result. But those people are looking at things with rose-tinted glasses. The reality is that the 2008 crash took 2 years to develop. It didn't happen overnight, and this Chinese property market crash will be no different. It will be a gradual, albeit rather worrying decline, followed by an instant snap as it all comes crumbling apart. The problems are already there. Home prices are already starting to fall. Developers are already defaulting. The energy crisis is in full swing, and the Chinese Communist Party's crackdowns are only adding fuel to the fire. Today, we're going to go over and look at the data which proves that the Chinese economy is on a one-way downhill path to destruction. But first, really quickly, if you're new to the channel, make sure to subscribe. If you enjoy this video, then hit that like button and leave a comment for the algorithm. Also, make sure to check out our Patreon. We're building a community of investors with loads of exclusive content, including buy and sell alerts and access to my own personal portfolio, so make sure to check that out and support the channel. So before we talk about the problems facing the Chinese property market and the Chinese economy as a whole, it might be worthwhile explaining why it's such an important issue to stop any of those commenters down below from this video complaining about this topic coming up once again. So just how big is the Chinese property market? Well, it's absolutely huge, sitting at about $60 trillion at this point in time. That makes it twice the size of the housing market in the United States and far, far larger than any other Western country like the UK or Australia. So it's pretty clear that it's a big asset class, maybe even the largest asset class in the world. But how important is it to the Chinese economy? Well, the real estate sector accounts for 29% of China's GDP, and its cities are still growing at a pretty incredible rate, meaning that the sector is still growing as well, or at least it was until September 2021. In China, property makes up 66% of household wealth compared to just 24% in the US. Pensions make up just 3% of household wealth compared to something like 23% in the US. Now in China, it's quite difficult to invest in stocks or shares, and we all know that it's nearly impossible to invest in alternative assets like crypto. What this means is that for people who want to save their money to invest it for their retirement, or even if they just want to get a little bit of a return on the cash they're holding, they are forced to resort to real estate. Now investing in real estate isn't an exclusively Chinese act. It happens all over the world, especially in major cities like New York or London, but the way it works in China is unique. You see, I invest in property in the UK and I own flats which I then rent out to people who want to live in them. They are occupied, which means they're not wasted space, and they give me a return on my investment in the form of rent. In China though, people who buy apartments usually don't live in them themselves, and they usually don't rent them out either. They just leave them there to sit empty. The reason why people don't rent out their apartments is actually quite simple, and it might just surprise you. No one wants to live there. These apartments are part of what makes up Chinese ghost cities, entire cities in the country which hardly anyone lives in. They have roads and railway stations, apartment blocks and schools, but no people to use them. These cities are built by the property developers and the local governments, but they were never meant to be lived in. They were merely meant to be sold for a profit to an investor who will just let it sit there. Needless to say, there is a lot of empty real estate in China. An estimated 65 million homes, or 20% of the total supply, is sitting empty. That means that there are enough empty houses in China to give every person in France a house for themselves. The problem is that you can't actually house people in these apartments because they were never designed to actually have people living them. Now you might say, oh, that just means they need some love. But no, you literally can't live in them. They don't have electricity or running water, they don't have elevators or fire escapes. Oftentimes, they don't even have staircases. They are concrete shells designed to look complete from the outside, but with nothing on the inside to differentiate them from literal construction sites. They are unsafe to visit, let alone live in, and it's not unheard of for entire skyscrapers to be forcibly demolished because they are so unstable they could just collapse at any point. If you're still not getting it, my point is this. These are not real apartments. They don't have real value, and when the prices of them start to fall, they will drop off a cliff quicker than you would believe. But the problems with the Chinese property market are not limited to these ghost cities and the hollow reality of the apartment blocks that make them up. There's another problem, one that might seem more familiar to those of us living in the US or the UK, but which is actually on a whole other level in China. I am of course talking about the affordability problem in Chinese cities. Now this problem is different for a whole bunch of reasons, mainly because people actually want to live in these cities. We're talking about places like Shenzhen, Beijing, or Shanghai. These major Chinese cities, large enough to dominate any other country in the world, are obviously going to have high property prices. That's a given. It's the same for any tier 1 city. New York, LA, London and Paris are all pretty infamous for having expensive homes, purely because space is limited and so many people want to live there. But in China, in Shenzhen or Shanghai, the problem is so much worse. In a normal mid-sized city in the United States or somewhere like the UK, you'd expect a home to cost on average 5 times the average salary. If the average salary is $50,000, a home would cost maybe $225,000, $250,000. In a big city, a very desirable one, a place like London or New York, then a home is obviously going to cost a lot more. The home, on average, is going to cost around 10 times the average salary, meaning if the average salary were the same $50,000, then that home would be $500,000. In Hong Kong, the ratio between home prices and salaries is 45. In Shenzhen, it's 43, and in Beijing, it's 42. If the average salary were $50,000, a home would be $500,000 in New York, but over $2 million in one of these big cities in China. In some cities like Tianjin, real estate per square foot is as expensive as London, despite the fact that people earn far, far less than they do there. Needless to say, China has a huge unaffordability crisis on their hands, and it's not going to just disappear because the entire Chinese property market is a bubble. So what then, I hear you say? There are always bubbles, and most of the time they continue to inflate and make people rich. Well, the problem with this bubble is that not only is it not inflating anymore, but it's already started to collapse. For the first time in years, Chinese property prices fell by 1% over September. Now I know at first that doesn't sound like a huge number. After all, it's only 1%, but that is over just 30 days. If that rate is annualized, we'd see a decline in the price of every property in China by 12.5%. That would mean that over $7 trillion of wealth would disappear over the course of a year. In terms of the amount of wealth lost, that would be like if Bitcoin went to zero and then it somehow kept falling until it hit negative $300,000 per Bitcoin, and all of that would be happening in just one country. Residential sales fell by 17% over the last month alone because no one is buying homes in China anymore. Output from the construction industry in China fell by 1.8% as well, which was the first time it had decreased since 1992, almost 30 years ago. The combined sales of China's top 100 property developers fell 36% year over year from September. A property investment consultant in eastern Hangzhou reported that the number of prospective clients has fallen 90%. Maybe this is just a seasonal blip, I hear you say. Maybe it's just the result of the natural market cycle. I hear you say that. But historically, September has been a peak month for the housing market, and there hasn't been any kind of data even nearly as negative as this for over 30 years. And the markets clearly aren't too optimistic about this either. The Bloomberg index of Chinese property developers fell another 0.5% on Wednesday after already dropping 24% this year so far. Yields on Chinese dollar bonds, which is dominated by property developers, have reached their highest level in over a decade, meaning it has never been more expensive to take out debt to build new apartments or even to finish old projects. This entire industry is a house of cards characterized by the greater fool theory. With a normal investment, like something that pays a dividend, the value is derived from the return given. Shares in companies that mine gold are one of the best examples of this, because the company mines and processes gold before selling it on the market and returning the profits in the form of dividends to the shareholders. Other companies do the same, just without mining gold. Instead, they use different methods to generate profits, like selling goods or services. But in both examples, the value is derived from the return the investment provides. Now, with property investing, the same is usually true. If you buy a portfolio of rental properties, the value is derived from the rents that those properties can generate. In China, though, these apartments don't get let out, so they never generate an income. Their value is derived from the fact that someone else wants to buy the apartment from you, despite the fact it doesn't generate any returns. You were a fool for buying the apartment from a developer, and the new buyer is an even greater fool than you are for buying it at an even greater price. The Chinese property market is almost entirely based on the idea that there is a greater fool out there willing to pay even more than you did at some point in the future. Now, some people will hear this and ask why the same isn't true for homes in the US or the UK or some other Western country. What about people who buy homes to live in? They aren't generating a return, and yet they will still probably appreciate over time, so isn't that the greater fool theory at work as well? Well, the answer quite simply is no, because in the West, people want to live in these homes. They may not give you a rental return, but they do serve a purpose as a place to live, and as long as people want to live there, they will have value. Not a value as an investment, but a value as a home. In China's ghost cities, however, where there are 5 million apartments yet only 5,000 residents, there is no one who actually wants to live there. 100% of the value of those empty apartments is derived from the idea that someone else might at some point want to pay more for it than you did, which means when homes start to lose value, they will drop at a rate that would be unthinkable in the West. Jack, a tech worker in Shenzhen who was interviewed by Bloomberg, said, "If property prices stop growing, we won't buy." And it really is that simple. The only reason people buy these worthless apartments in empty cities is to make money. And now that they've stopped going up in value, now that they won't make people money, people will simply not buy them. Demand will drop off a cliff, and the value of those apartments will drop with them. So how on earth did it get to this point? Well, it's been 20 years in the making, because that's how long the property boom in China has lasted. Everyone loves to get rich from a bubble, and everyone who gets rich loves to tell people how this time it's different. This time it won't pop and that it will just keep inflating forever, but anyone with any sense knows that that isn't the case, and the Chinese property market is a bubble just like any other. Now, if you're not clued up on the property market in China, maybe before this last month you had hardly heard anything about it, and so now you're surprised that it's worth $60 trillion and it's the largest asset class in the world, and you're wondering, how did this happen? Then don't worry, I'm going to explain that now. Basically, in China, the land belongs to the government, literally all of it. People can lease or rent it from the government, but ownership is always the CCP's. But the CCP, the Communist Party, has been pushing for huge economic growth over the last few decades, and one of the ways they've been doing it is with construction projects. They lease this land out to developers who build huge apartment blocks all over the place, and then they sell those apartment blocks to individuals in China. Now, why would these developers use their own money to finance these construction projects when, if they use debt, they could build 10 times as many and make 5 times as much profit? So, obviously, these developers took out that debt. They got loans from banks, they released corporate bonds, and they used this influx of cash to build apartment blocks. They then took the profits from those projects and used it to take out even more debt and build even more apartment blocks. In the process of this, they really weren't too conservative. They would overpay for the land from the government, and they'd overpay for their materials, and they'd even overpay for the debt. But as long as the property market continued to boom, they'd still be able to make loads of profit. This cycle of debt-fueled growth continued to grow until this industry was the most indebted industry in the world, and almost all of the most indebted companies in the world were Chinese property developers. Home prices soared because of the nature of investing in China, as discussed earlier, and the CCP started to realize that this wasn't sustainable. People couldn't afford to buy places to live, and at some point, this bubble would pop and it would damage the economy. So the CCP sought to make changes to the industry, and they did so by implementing the 3 red lines policy. Now, the actual details of the policy aren't too important, but what it did do in general was put limits on the amount of debt that a company could take out in regards to its assets, profits, and revenues. If a company exceeded those limits, they wouldn't be able to take out any more debt. Well, despite the fact that these rules really aren't particularly stringent at all, pretty much every property developer in China failed to meet the requirements, and so they could no longer take out any new debts. All the problems that we're seeing in the Chinese property market today actually started when that policy was enacted just over a year ago, and it's just taken this long for those problems to develop. Now you might say, so what if a developer can't take out more debt? It just means that they can't grow at crazy rates. Surely they would still be able to complete the projects they already have started and pay off their old debts with those new profits, right? Well, that's where the problems start to mount, because these companies couldn't do that. You see, their debt was mounting up and their interest payments that they were due to pay were getting larger as well. Usually they would simply just take out more debt, issue more bonds to pay off the old debt, but the three red lines policy had put an end to that. They'd have to sell assets to pay off their debts, which, to be honest, is what they should have been doing in the first place. But that meant not selling their apartments for as much as they would have liked. Now, if there had only been one company in this position, even if it had been as large as Evergrande, then this problem wouldn't really be a problem. The company that needed the cash could have sold their development projects that haven't been completed to another developer, but because they were all in the same boat, they were all strapped for cash, no one else could help out Evergrande. These companies' bonds started to collapse in price as well. Why would you want to own a bond, assets that are supposed to guarantee you an income, if the company that's supposed to be paying that income doesn't have any cash? Well, simply put, people don't want to buy those bonds, so they sold them, which caused their values to drop. Take a look at any number of Chinese developers' bond markets and you'll instantly see the problem. Even if they could issue more bonds, they would be absolutely worthless and they'd be selling them with ridiculous yields which would only serve to bankrupt the companies in the future. So then, maybe the companies issue more shares and try to get an influx of capital that way. Well, we have pretty much the same problem here. Why would you want to own shares in a company with too much debt and no way to pay it? Well, you wouldn't. So these companies saw their share prices plummet as well. In order to pay off their debts by releasing new shares, they'd have to dilute all other shareholders down to a ridiculous amount. And even then, they still wouldn't be able to bring in enough capital because they'd be selling at such a huge discount. Pretty much the only option here is to sell the assets that the companies have, their apartments or their developments, in a fire sale. But we already know that the other developers can't afford to buy new projects, so that leaves only the average Chinese citizen to buy these apartments. But again, there's a problem with that. We've already explained why the Chinese property market is a bubble and why it's based on the greater fool theory. So the second these properties look like they're not going to keep going up in value, or even worse, look like they're going to go down in value, then demand for these properties will instantly collapse. When every buyer is an investor just hoping to flip the apartment onto a greater fool, it is so much easier for a small down market to turn into a full-on market rout. Needless to say, the Chinese property market is not in a good position and it's difficult to see a way for disaster to be avoided. But you know what? If that were the only problem, then at least the rest of the economy would be mostly okay, right? Well, maybe, but unfortunately, that isn't the case. First of all, there's the problem that the property market is so influential and dominant in China, especially when we compare it to other economies around the world. Compare the Chinese property market bubble to the US property market bubble of 2006, and it's in another league of insanity. Now, I'm sure I don't need to explain to you how much of an impact the US housing market crash had on the American or even the worldwide economy, so it should be pretty self-evident that a Chinese housing market crash would be at least as destructive to the Chinese economy. Then we have all the other problems at play in China right now. The CCP is going on a tear, damaging businesses and destroying wealth. They've been punitively attacking companies like Didi for daring to IPO on a US market instead of a Chinese one. They've literally been stealing billions of dollars from huge companies like Alibaba under the guise of common prosperity. They've been targeting the gaming industry, preventing young people from playing video games for more than a few hours a week, damaging Tencent, the world's most dominant gaming company. They've even gone so far as to nationalize an entire industry to prevent profit from being legal in the education sector, wiping out billions of dollars of wealth instantly. But I'm afraid the problems in China don't even stop there either. All over the world, there seems to be an energy crisis building. but it is developing far quicker in China than anywhere else. Rolling blackouts are becoming more and more commonplace, and the CCP seemingly has no idea how to effectively tackle them. For an industrialized nation like China, one built off the back of manufacturing, a secure energy sector is absolutely essential to the health and well-being of the economy. That secure sector is nowhere to be seen, however, and I seriously wouldn't be surprised if it were the next target for nationalization. I know it probably seems like I've gone a little bit off topic here, but all these problems will influence the Chinese property market as well, and I believe that that process has already begun. We've seen the first month of home price falls in China, but we haven't seen the last. This collapse will be worse in China's ghost cities at first, where demand is entirely fabricated, but as the economy starts to take a hit, as people lose their jobs, wages decrease and consumer sentiment drops, the biggest cities will start to feel the impact as well. The Chinese economy has already collapsed. You just don't know it yet. If you're new here, then consider checking out our Patreon. We're building a community of investors where we can talk and discuss all kinds of ideas just like we do on this channel. You also get access to loads of exclusive content that isn't available anywhere else, early access to all videos, private live streams and buy and sell alerts from my personal portfolio. And you can help support the channel for as little as $1 a month. If you want to read those Business Insider and Bloomberg articles but you can't because you're stuck behind a paywall, well, I've posted those full unedited articles onto my Patreon as well, and that's something I do all the time. On top of all that, once we reach 100 patrons, I'm going to hire a full-time video editor to help me put out even more content just like this. If you enjoyed this video, then make sure to subscribe. If you want to help spread the word, then consider liking the video and leaving a comment, and YouTube will do its part by pushing this video out to more people just like you. I really do appreciate all the support you give the channel, even if it's just leaving a like. There's also a link to my other channel down below in the description that you can check out as well. In the description, there's a link to my favorite brokerage called eToro, where you can trade stocks and shares, crypto, commodities, foreign currencies, and more, all for 0% commission. And there's also a link down below in the description to BLOCKFI, where you can get up to $250 in free Bitcoin, and you can earn interest on whatever crypto you hold. Whether it's Bitcoin, Ether, or even stable coins, you can earn as much as 9% interest a year. Thanks for all the support. Thanks for watching. Stay stoic. Until next time.